Let's talk about UNH. Oh my goodness. This thing is down 56% off of its all-time highs. I did a video just a couple days ago, highlighted some key levels, and what I want to do today is update you on those levels and what I'm seeing on the stock right now. There's a lot of dip buying that is being attempted on this, and so far, everybody is practically getting plastered unless you hit the very lows of the day, and even those at this point are not a guarantee that they're going to hold. So what I want to do in this video is I want to identify some key levels to watch for, and really the level to where, okay, if it breaks below this level, I would probably just go ahead and stay back and not even get involved in it, because there's a lot of key events that we have yet to see and how that might impact the stock. For one, are they going to suspend their dividend? That's a very high possibility at this point, I would believe, considering the kind of events that we're seeing with the DOJ investigation and so forth. So let's go ahead and jump into the charts right now. Now let's pull up the weekly chart. And you can see here too, I mean, the volume is absolutely astounding on UNH over the last 3 days, but today in particular, I mean, I have to like pull the chart way up here just to be able to like not have it get interfered with the volume. But looking at the weekly chart here, we can lower it down for that. You have the trend line. This is the key levels that I was identifying on Tuesday when I did this video. This is a major trend line that has been tested on a number of occasions, like in 2015, back during the 2020 lows. And so this made sense as a logical level to see, okay, are we going to test this level? Are we going to hold? And are we going to bounce? Before you buy the dip on anything, don't just be obsessed with like, holy cow, I'm getting in at 300 or 290. Don't be obsessed with those levels, because until you actually see the stock start to bounce, there's no reason to actually play the bounce. You want to see it test the support, hold the support, and bounce off of that support. Until you see those three things, there's no reason to try to blindly buy the dip. And so right here, you have a lot of people that said, okay, well, we're at a key historic level, right? I saw this video on YouTube, might as well go buy it right here, but then it goes right through it. And the fact of the matter is it may continue to drop lower. So you look at that on a daily chart, and what does that look like? Well, first of all, we got to raise the volume bars a little bit, but here's the thing. You can get interested in, and yes, we are below that rising trend line. You can get interested in buying the stock and say, okay, this is like an incredible buy, but why are you getting into it right now? It hasn't even broken back above the 5-day moving average, and it's a good distance from actually getting above it. So what are you afraid of? That it's going to rally and somehow it's not going to break back above the 5-day moving average? As long as it's below the 5-day moving average, it's in a downfall. It is yet to turn the corner, because that's like one of the most basic elements of a bounce is just getting above the 5-day moving average. You're not above the 5-day moving average, you're not really going anywhere. So until you actually see the 5-day moving average get broken, there's really no reason to even consider this as a stock trade. Also, one of the areas that I would be watching for, we're going back to the weekly chart here. I've never had to adjust a chart so much as I do with this one here, but golly, it's absolutely bonkers what's going on with this thing. You have this area. And so I highlighted this support level here before, like right here at the 210 level, but I'd also like to expand that a little bit, because I think it's more of a range than it is an exact level. And so you have this like range that goes all the way up to around 293 and goes down to about 210-ish. And again, it's not like an exact number, because it's not exactly clean technicals on it here. But you get the point, though. At around about 210, there's a support level there to watch, and it goes up to about a range of 292. So we are inside of that range as we speak. If it breaks down below this range, that's probably where I'm saying to myself, okay, there's a much even bigger issue going on with this stock than what we're even knowing about. Like this thing is in absolute capitulation mode. It's blowing itself up. That's where I would go ahead and step aside and be like, no, not playing this one anymore. And yes, there's more shoes that could fall. You've got more downgrades that are likely. I mean, Wall Street was way off sides on this one. They didn't see it coming. So obviously what they're going to start doing is they're going to act like that they're ahead of this by starting to revise their estimates, their price targets to a much lower downside, so that they don't look like the clowns that they already are. So with UNH, don't be surprised if there's more bad news to come. When you see this kind of volume, that usually is a sign of capitulation, but it becomes a little bit different when the DOJ is involved and when you have some major federal investigations going on with these stocks. You're starting to get into the worlds of like Enron. That becomes a huge issue. That becomes a huge problem for really trying to gauge the value of the stock, because you don't know how bad it's going to get from here. And another thing that I would remind you of is that this isn't like back in like 2008, or you go back to the dot-com bubble. But in like 2008, for instance, we went from like 64 down to 16, a far bigger move than what we're seeing right now. This isn't the same as that, though, because that was part of a much bigger sell-off in the broader markets. That we were in a great recession. A lot of stocks were dropping 50, 60, 70%. Right now, we're in an epic rally off of some recent lows, and this stock has yet to participate. I mean, this is 5 straight weeks to the downside, and so there's a much bigger issue in play here that wasn't there in 2008. So you can't really compare those two scenarios when you have a stock individually falling apart, and it's not because of overall market conditions where everything else is falling as well. That becomes a much bigger issue. So be very careful. Be very careful about trying to buy the dip. I think one of the most basic things that you can do is, at the very least, wait for it to cross back above the 5-day moving average. And if it can actually show that it can get back above that, which it's been below for the past month, then maybe you start getting in a little bit at a time. It's a $274 stock, so maybe you buy 1 or 2 shares. But for me, if I'm going to play this from a long-term basis, I'm absolutely going to play my entry on this from a very slow and steady pace. I'm not going to be getting in all at once. We're talking about adding very slowly and very incrementally over time. I essentially would want somewhere between like 3 to 6 months to be building this position. And it's not going to be at all an aggressive fashion. Now, if the stock takes off and I only get a small portion of what I wanted on the trade, so be it. I tip my hat and say, well, I got a little bit, but I didn't get a ton. It's still fine. I made a little bit of money off of it anyways. But I'm not going to just go diving in onto the stock, because we don't know how much further that this stock can still fall. If you enjoy this video, I would encourage you to like and subscribe, and let me know down in the comments below, have you started averaging in? I've seen on the previous video, there's a number of you that started getting in at like 310 and 320, and obviously that's not working out too well for you so far, but let me know what your game plan is. I want to hear about it, and we can discuss it in the comments. Thank you guys, and God bless.